You're in a pinch, you need some credit, but you get denied. What can you do? Ted is here. Let's begin.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Okay, Ted, welcome back. Today, we are going to discuss what you can do if you are denied credit, particularly if you are in a pinch. I don't know what that means, but we'll figure it out. So Ted, off the top of your head, without looking at the script in front of you, so we can maintain the illusion.
Which you've only just handed me?
So you haven't actually read it. We want to maintain the illusion that this podcast is completely unscripted and off the top of our heads.
Right.
Why would the nice, friendly, big bank reject your loan application? Why would they turn you down?
Well, the most obvious reason is there's something wrong with your credit report or your credit score.
And so what are all the different things that could make your credit score lousy?
Well, so the first one is high utilization. So you've got a lot of credit that you're eligible to use and you're actually using it. So that means you've extended yourself to the beyond what they think you can.
You're maxed out.
That's a good way to say
maxed out. Okay, that's a good one.
You have a problem with late payments.
Okay,
so that's reflected in your score. Your rating every month reflects, do you pay current, a month late, 2 late, 3. The more late payments you have, the lower your score, the better, the worse your credit looks.
Makes sense.
Right? Maybe you haven't had credit for very long. You're a new Canadian or a young person that's just started out, so they don't have enough history to go on. They just don't trust you because they don't know you.
I'm a young person.
There you go. And maybe there's been some sort of recent event on your history. Bankruptcy or proposal would be a good example. NSF charges. No, somebody's taking to small claims court, collections, that sort of stuff.
I got sued. It shows up on my credit report.
Right.
Okay, so this all makes sense. There's nothing radical we have said in the first 1 minute and 30 seconds of the podcast. Now, I agree lenders use your credit score to make lending decisions. And in fact, I'm of the view that a lot of stuff is just automated now anyways.
Probably.
You go online, bling, 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 and the computer says, oh, your score is too high, too low, whatever.
Yeah. Well, give them a link back to the episode we did on credit scores. Because again, it's your credit report, not your credit score that they care about.
Exactly. So these are both important things. Now, there is, however, a lot of information that is not on your credit report.
That's true.
So
my favorite color.
Exactly. Yep. All those things are not there. Your current income is not there.
My income certainly isn't.
Yeah, there you go. Well, even your current employment.
It's often wrong.
Because it doesn't get updated anymore. So, I used to work there in 2007.
Well, it's updated if any of the agencies or the entities reporting your credit report it, right?
Yeah, but of the credit reports we look at, I would say 80% are not updated. They're just wrong. Mm-hmm. It doesn't show what assets you own.
That's true.
Because it's your credit report, not your assets report.
It has nothing to do with your net wealth.
Exactly, which is why when you go to the bank, they have you fill out a loan application, and that's how they get more information. So I've got a list of other information that they would get on your loan application, and that could also kill your chances of getting a loan. Okay. So I'm going to give you my list, and I want you to tell me what each of these things mean. So first obvious one would be insufficient income.
Right. So the lenders all have an algorithm that they use that says, if you have this much income, you can afford to have this much debt. If your income isn't high enough to allow you to have any more debt, they won't give you any.
So it used to be the ratio as well, 30% or something, which I guess would be the next item on the list, a high debt to income ratio.
Right.
So, which is exactly what it sounds like.
Mm-hmm. You've got a lot of debt based on your income. So proportionally speaking, you've got a lot of debt.
Yeah. So if I make $1 million a year, okay, I can borrow more than somebody who makes $10,000 a year.
Right.
But if those ratios are out of whack, then you got a problem. Now, I already said that your credit report probably does not have up-to-date employment information.
True.
So they ask you, how long have you been working at this place?
Right.
And if it's short or if it's unstable, that's going to hurt your chances to get a loan.
They're looking for a history to see that you've had the same income for a long period of time. You've been at the same employer for a long period of time. It gives them a greater level of comfort and assurance that you're going to be able to repay the debt.
Because that's stability.
Right.
If I've been there for 10 years, I'll probably be there for another year. If I've only been there for 3 months, well, who knows?
Who the hell knows? Right.
Then we've got the lack of collateral. It's easier to get a loan if you've got collateral.
Right. So if you're willing to back up the borrowing with some asset, so for example, houses and cars are the most most typical examples. You don't make your payments, they can take your asset. Well, that makes them more comfortable.
Yeah, because if you don't pay, I got a
I
backstop. And then I guess when you fill out the loan application, they might ask you for a bunch of stuff. You know, you're self-employed, so we want to see your tax return, or we want to see
your taxes in 3 years.
That's
They'll
right.
probably say
then,
no.
Yeah, exactly.
Yeah, right.
So incomplete documents would be another reason why they would deny you. Okay, so we've talked about your credit score. We talked about your loan application. I've got 3 other reasons why the bank could say no. So I want you to give me your thoughts on this.
Okay.
The first one would be you want to borrow money for something, and they say, no, we're not letting you borrow money for that thing.
Right.
So what are some things that the bank might be a little queasy about letting you borrow money for?
Well, you know, the one that usually confuses people the most is the banks don't want to lend small amounts of money. So if you really need $5,000, $7,000 to get you over a hump, a bank probably doesn't want to lend you $5,000 or $7,000 because the admin fees and all their costs, they want to lend you maybe 10. Even that they're not comfortable with anymore. They want to lend you 25.
That's why they like mortgages.
That's right.
Because it's a big number. It's going to last for 25 years.
And it's easy.
But you're right. To go through the process to lend you $1,000 or $10,000, it's the same process.
Right.
Fill out the application, do the credit checks, all that kind of stuff. So, okay, so if you're borrowing too low an amount, that might be a problem. Obviously, if you're borrowing too big an amount, that could be a problem.
And if you're borrowing for something that they don't see the real value in. So an example would be you want to take a vacation, or more specifically, you want to take a vacation to Vegas.
Yes, I do.
Yeah, so that might make a bank nervous. If you got great credit report, good income, they may not care. But if you're marginal, they're going to say, well, you know, should you really be spending your money that way?
Yeah.
Should you be spending their money that way?
Yeah. Borrowing to buy a car, okay, we cannot understand that. We can understand that. But
Depending
a
on the
vacation, or if you go and say, and I'm sure this happens to you all the time, I want to buy a lot of crypto.
Right,
They
definitely.
might have a problem with that. Okay, so with the loan amount or the loan purpose might cause you to get denied.
Yep.
What about the bank's lending criteria? Because everybody has different rules, right?
They do. And so we've got Schedule A banks, Schedule B banks, we've got high interest lenders, and then we've got the people that are, you know, the bottom dwellers.
We'll get to them.
Okay. They all have their own criteria. And basically, if you don't meet the criteria for a Schedule A bank, okay, maybe try the next tier down. You don't meet them, okay, try the next tier down. But every time you take a step down this ladder, your interest rates are going to go up. The cost of borrowing is going to go up.
And so it could be something like, okay, at our bank, you've got to be making at least X number of dollars a month.
Right.
It could be you can't be a brand new Canadian. You've got to have been here for a year or 2 years. You've got to have a certain employment history, whatever.
And the bank may say, oh, we're not going to do it if you're on a fixed income, depending on what the source of that fixed income. I mean, there are lots of reasons.
Yeah, you're on a pension, so we're not going to lend. Or maybe we will lend to you because you're on a pension, because we know you got lots of money. So now I think another factor in this is that banks have, you know, goals, targets. We got to meet our quarter. And if we've already lent out the money that we needed to lend,
They have specific ratios that they have to meet for their own requirements. But yeah, there are certainly times when the banks will all say, well, you know what? It's time to tighten the screws a little bit. We're going to be a little more conservative about who we borrow with.
and you would certainly see that with a private mortgage lender.
Definitely.
Because, okay, I'm a rich guy. I got $10 million to lend out. Well, once I've lent out the $10 million until someone pays off their loan, I got nothing else to lend.
Right.
So that could be another reason why they may not lend. So, okay. So those are a bunch of reasons why the lender may reject your loan application. Now, the title of this podcast is What to Do If You Are Denied Credit and You Are in a Pinch.
Pinch.
So why would someone be in a pinch?
Well, the last couple of years are a perfect example. Inflation's been ridiculously high. So food costs went up much faster than people's incomes. Housing costs, the same thing. So it's costing you more to live. So there's a high cost to your living. You got to get the money from someplace. Next perfect example, you lose your job, whether it's, you know, it's moved to Alabama or Mexico or wherever they're going to these days, or for whatever reason, you're no longer working. Well, that'll put you in a pinch because nobody has savings anymore.
Yep.
And then unfortunately, a really common one, some sort of marital breakdown.
Yep. So something has happened, and I guess all of those things add urgency to the problem.
Right.
So I lost my job, and it's going to take a period of time until EI kicks in.
And EI is not as much as you were making when you were working.
Yeah,
by definition.
I'm getting 55% or whatever the number is. So it's going to take a few weeks to get the EI check, but my rent's due next week.
Yeah, your expenses do not change overnight when your income can if you lose your job.
So that would be the definition of in a pinch, I guess.
Right.
So I don't have the money. I need a loan, and that's obviously causing me a massive amount of stress. So I go to the bank. The bank says no. So now I've got to turn down, you already mentioned this, going down the ladder. So let's talk about your favorite or whatever the opposite of favorite is. Who can I turn to? Well, of course, it's payday loans.
That's right. And you really shouldn't, folks. It doesn't matter how desperate you are. That's one of those mistakes that it's hard to recover from.
Okay. So, but in the example I'm giving here,
you need cash.
You're right. I lost my job. The rent is due, 5 days from now.
Yep.
So what am I supposed to do? What's your magic? You don't want me to go to a payday loan place.
Right. I would start by talking to the landlord and explaining to them exactly what happened. Okay, I just lost my job. They haven't given me severance. I'm still working out all that stuff. EI hasn't started. Can I get some kind of extension or pay partial rent? Whatever it is that you need to do. Try working with the people that you have a relationship before you start going out to these bottom dwellers. Yeah,
and the reason for that is money.
Right.
So I believe the current rules, we're doing this in 2025, is payday lenders can charge $15 on 100, or did it go down to $14?
Still 15.
I can't remember what the rules are, but whatever that number is, it's a massively high number.
Right.
Like that's
over 2 weeks.
Yeah, it's a huge number. So if you talk to the landlord and say, look, it's going to take 2 weeks for my EI to kick in, I'll be able to get you the rent in 2 weeks. It's unlikely that you're going to get evicted in 2 weeks.
Right.
I mean, I guess if you're already 6 months behind, then maybe you got a problem.
If you have a payment history problem, that's a different discussion. But we're saying suddenly something's gone wrong and you're in a pinch.
Yeah, and so when we look at our stats, and of course we talk about our Joe Debtor study regularly, of our clients who have payday loans, the average number of payday loans last year was 4.3.
Right, for each of our clients.
Yeah, so
that's average.
So that's average. So you don't just have one.
You never just have one. It's like a potato chip.
You can't just have one. I do. Right. I do. And so why is that? Why can you only have one potato chip?
So you take potato chips is a different conversation. For the payday loans, you get the first one. You need $100. So next week when you get paid, you pay back $115. Well, you were already short, so probably now you've got to borrow another $100 to get you through to the next one. Only $100 may not do it. Maybe now you got to borrow $150, and it just becomes a cycle.
Yeah, because if you didn't have the $100 today, are you going to have it in 2 weeks? And I guess the hope is, well, yeah, I get my paycheck, so I'll have it, but I'm paying back more than the $100, right. And then I've got another 2 weeks worth of expenses built up.
What they count on is they always make it easy to get the loan. They're at funny hours. You can do it online. You can do it in your pajamas while you're watching late night like TV or something. So getting the loan's easy, and you get used to it. So I borrowed this first time. Okay, 2 weeks later, I got to borrow again because I just paid back the first one. That's not a big deal. And it snowballs.
Yeah, and you can't keep borrowing from the same place because there's rules. But okay, there's 4 of them on the same street corner. Mm-hmm. So I go to this one, and then I go to that one, and then I got to go to this one to pay back that one. And next thing you know, I've got 4.3.
Yeah, and what you find out is that you were short that $100, but now you're paying $200 or $300 worth of interest charges on all these short loans every month. That's just made things worse.
And we're going to talk about what to do about that. But back to our study then. So the average person who has payday loans has 4 of them because of what you just said.
Right.
The average payday loan size last year was almost $1,800.
Which is insane.
Which is insane because payday loans are not just payday loans. Now they're installment loans and everything else.
Yep.
So we now call them rapid loans because they're even...
because they're easy to get.
Yeah, because they're easy to get. And when you do the math, okay, the average payday loan debt of people who have payday loans, $7,700.
Right.
So that's only about 15% of their total unsecured debt, but it's a massive interest charge debt.
The amount it costs you to service that $7,700 is extreme.
Is huge. And when I look at the age groups that get them, it's everybody.
Everybody has
it. When I look at from age 18 to age 59, it's around 35% of every single age group has a payday loan. And even once you get over the age of 60, it's still 24%. So it's
and we
massive.
kind of view these as this is the last straw. It's the nail in the coffin. You've extended all your other debt. You've maxed everything out. You still need more cash from someplace, so you fall on these guys as your last resort. And then you figure out, hey, wait a minute, I should have gone to do a proposal.
Right. And we're going to talk about that
later.
And which is why it's 15% of their total debt, but it is the final 15%. It's the thing that tips you over the edge because the interest rates are so huge. So, okay, so let's get to the practical advice section of our little podcast here.
Okay.
You get denied for a loan, or you get, maybe it's just a credit limit increase. I called them up and said, hey, can you bump my credit limit on my line of credit or my credit card or whatever? And you get denied. So, okay, I got denied. What's the first thing I do then?
Well, I'd contact whoever denied you and find out specifically what were the things that caused you to be rejected. Do you need higher income? Do you need to reduce some of your overall debt levels? What do you need to do for them not to deny you?
Yeah, what happened? And
how do you get approved?
I guess in the old days, you'd get a letter saying you have been denied.
Right.
But I don't think there's any letters anymore.
I think now they're most likely ghost you.
Yeah, just
don't return your call.
You're not getting it. So, but I agree. If you went to a bank and, sat down with someone or applied online or whatever, then you're right. You want to call and say, well, okay, well, what happened? Like, what's the deal? And if the answer is, well, you have to be at your current job for a year. Okay, well, I've been there for 10 months. So if I apply again in 2 months, then I'll hit the numbers. Yeah, that's what our computer says.
Yeah, and make sure you ask them how much you're getting hit for applying and being denied, too.
Yeah.
If you come back 2 weeks later and apply again, you're going to take a hit.
It's a good point because your credit report shows all inquiries. And if there's an inquiry and then another one, and they're all in a bunch of different banks and there's no new loans showing up,
they're thinking you're shopping around,
which you are. And so that's going to hit you. Okay. So let's get a little more big picture here.
Okay.
So, I asked them why I got denied. They tell me, but presumably I was denied because I didn't qualify.
Right.
That's probably the reason.
So you need some more background information. Why don't you get a free copy of your credit report?
Okay, that's an excellent starting point because clearly you've got some underlying issues here.
Right.
So I will put a link in the show notes to both Equifax and TransUnion to get your free credit report.
Those are the two biggies.
They are the only two in Canada. Now, everybody has on their phone Credit Karma and Borrowell and a bunch of other ones.
They're all buying data from one of those two companies anyway.
Right. They're the secondary source.
Right.
And so we are strong proponents of going directly to the source. Now, I know those ones are free. They're right on your phone. Every time something changes, you get a bing, bing, bing. But what it doesn't show you is all the detail.
Yep.
So when was my last payment date? Everything else. Now, you don't need to get the credit report with your credit score.
Right.
Because to get that, you've either got to use one of these apps, which are probably not accurate, or you got to pay for it.
Right. And I'm not telling you to do that.
No, I don't think you need to pay $20 a month to see your credit score.
Right.
But you set up your account with Equifax and TransUnion. It's free. Don't make it easy. You got to know the links, but I'll put those in the show notes. And you got your account. So now you can see, oh, look at this one. This one shows that I've got late payments.
Right.
I don't think I have late payments. Oh, I do. Let me start making payments on that one or whatever the issue is. So I agree. The starting point is look at your credit report, see if there are things that you can fix.
Right.
But that's not going to help you in the short term because I'm in a pinch. I got to come up with, rent money for next week or something.
Right.
So it's going to take time to gradually improve my credit report. I need cash. I need it now.
So have you got anything that you can turn into cash?
Like what?
I don't know, old sports equipment you don't use anymore, or look literally anything. Look at all of your stuff and say, is there anything that I've got that I haven't used in Lord knows how long? Maybe I should try and get rid of it.
So you go on Kijiji or Facebook Marketplace
Whatever
or you have a garage sale or whatever. Yeah. And if what I need to raise is $50 or $100 or $200 or $300 or something, yeah, okay, maybe I've got something I could sell.
Yep.
The other obvious one would be an RRSP.
Yeah, be careful.
Why?
Well, because when you cash in your RRSP, first there's tax implications. So if you're pulling out less than $5,000, they're going to hit you for 15% tax. More than that, I think it might be 30. It's a pretty big penalty. And you never get that room back. So the whole idea with RRSPs is you're saving for the future. If you're taking the money out now, well, so you're taking away from your future.
Yeah, and I don't know if the numbers we're quoting are correct here, people. So you can all put a note in the comments. And, no, you're wrong. If it might be 10% under 5,000, and then it goes up from there.
I think it's 15.
But it doesn't matter because when you file your taxes at the end of the year, whatever your tax rate is, that's what you're paying.
Well, and it may push you into a higher bracket anyway.
Yeah. So if you're already in the 40% tax bracket, it doesn't matter what the withholdings are at the bank are. Right. You're going to be paying at least 40% when you file your taxes. So, and then your point about you lose contribution room because you only get so much.
Right. So every year, based on your income, they give you a threshold. You can add this to your RRSP. And if you take that money out, they don't say you can put it back later.
Yeah, which is different than a TFSA.
Right.
So if you need money in a pinch and you've got money in a TFSA, that's where you would take it from because there's no taxes to take it out and your contribution room resets next year. So you can actually put it back in. Right. So I've got money in an RSP. If I take it out, I'm going to get whacked with taxes and I can never put it back in again. Now, I guess if I've got $100,000 of unused room and I'm never going to use it anyways, then maybe that's less a big deal.
Now, that's a different conversation. There are lots of people that'll never use their RSP anyway. But
so is there ever a case where you would say, yeah, you know what, take the money out of your RSP because you need money in a pinch and it's better than going to a payday loan place?
Well, and if you know your income's going to be lower for an extended period of time, so maybe you've lost your job because of some physical ailment. You know you're not going to be able to go back to that job ever again, so you're going to be earning less money, or maybe you're looking at some kind of disability pension. There are times when it would make sense. It's just, you have to be careful.
Yeah,
that's all we're saying.
I guess if my EI has run out, and we're now at the start of a new year, well, I've got no income coming in, taking the money out of my RSP. Well, I'm going to be taxed at a really low rate anyways. Yeah. I got to pay my rent. But I agree with you. It's a decision that you've got to really think through. Now, we get a lot of people who have liras. So what's the difference between a lira and an RRSP?
So the lira, the first two letters are locked in. And so the money, you can't easily access it. There are ways to. There's always ways to do everything if you try hard enough. But that's not money that normally you can tap into or anyone else can touch either.
So it's a locked-in RSP. You have to make a special application and say, look, I can't pay my rent. I've got extreme hardship. So, okay, again, in that case, if you have to, you have to, but understand the tax consequences. Okay, so we don't really want you tapping into an RSP. What else can I do?
Well, so look for other forms of government assistance. Are you already on EI? Do you need to look at Ontario Works? Is there other emergency grants or bursaries that you qualify for? Are there things in your community that you qualify for? Housing assistance, that sort of stuff. Yeah, it depends on how bleak your situation is.
The food bank, that sort of thing. I mean, if you need it, you need it. So you've got to, that's why it's there. So, and then of course, you know, family support, friend support. Nobody ever likes asking their family for help, but well, sometimes you got to do what you got to do. So those are all good ideas on the cash flow front. What do you do when a big chunk of your problem is all these debt payments you've got?
Right. Well, you can start by talking to your creditors. Just about every loan or line of credit has some kind of provision where once a year you can defer a payment. Now, you'll pay extra interest in the long term because of that, but if by skipping a payment on your loan this month means you can pay the rent, it's probably the right thing to do.
And that's fairly easy to do with a mortgage and a car loan. It's less easy to do with a credit card.
Yeah, or the personal loans and lines of credit, they'll probably let you do it too. They might give you interest relief. But you're right. Credit cards, you basically ought to convince them that I need interest relief or something for a couple of months.
Yeah, and if they say, nope, sorry, we're not going to do it, well, I guess you do it anyways because I don't have any choice. I can't make the payment this month. But at least you've told them, you've had a discussion with them that, look, I can't make the payment. Is it better to make a partial payment if I can, just so I'm not on the same list of you never made a payment, or are you kind of screwed either way?
Yeah, I think you're screwed either way. It depends on how they want to report you.
Yeah. So, yeah, I mean, if you don't make a full payment, then you're paying late.
I mean, think about it, folks. You got to have someplace to live. You got to have something to eat. You probably got to have your medications. And then after that, if the money's left over, you start dealing with the other stuff.
Yeah. So what we're trying to do here is throw out a whole bunch of different suggestions. None of them are fantastic.
Right.
Because
you're in a bad place.
You're in a bad place.
Yep.
But we talk to people all the time and go, I didn't realize I could actually talk to the bank. Well, yeah, they may still say no, but you might as well.
But it costs you a phone call.
Right. Now, again, what we're trying to get to is the underlying problem here. And the underlying problem is my income is not as high as my expenses. That's my problem. So you've got to either increase your income or reduce your expenses or both. which is not easy to do.
Or not easy to do quickly.
That's right. That's in the short term, it's not easy to do. It's the only long-term solution. So can I get a side hustle? Can I get a second part-time job? Maybe I got to move back in with my parents.
Go back to our Joe Debtor. The average person that we saw as clients last year had minimum payments totaling something like $2,500 a month, and their budget had $280 available to pay.
It's impossible.
Can't be
so
done.
you have to address that cash flow issue. So, okay, let's assume you've done everything you can in the short term. You've sold assets, you've picked up a side gig, you've asked your creditors for some deferrals, you've talked to your family and friends, borrowed a few bucks, whatever you can, and that's when you realize that it's exactly what you just said.
Right.
My debt payments are $2,800 a month, and I got $300 available to make debt payments.
So what am I to do?
So what am I going to do?
Yeah. So that's when you need to contact somebody for professional advice. I mean, it's the commercial part of the program. We're going to talk to you about a consumer proposal, or if things are really bad, maybe in personal bankruptcy.
And a consumer proposal may be the second step as opposed to the first step.
Right.
Because if I've lost my job, then the debts are not my number one priority.
No, your number one priority is looking after your living expenses.
Right. So it's very common that someone comes in to see us and says, well, I've lost my job. I've got $50,000 worth of debts. The debt payments are a couple of grand a month. I can't pay them. I'd like to do a proposal.
Right.
And your answer to them would be,
well, we got to get you stable first. We got to make sure where you're living is secure, that you've got everything that you need to live. So you can pay the utilities, the food, all of those things that are necessities of life. And then it's, well, what do we got left over to deal with the debts?
yeah, but the creditors are calling me. They're threatening to garnish me. They're going to freeze my bank account. Like, what am I supposed to do today?
Well, so when we file the proposal, we're going to stop all of those things. So we're often saying that you can't immediately change your income or your expenses, but with a proposal, actually, you can dramatically change your expenses overnight. You just got to make sure it's the proper solution for your situation.
Right. And I totally agree. You got to get stable first. When you go to the doctor, we stop the bleeding and then we put the cast on your leg. We don't do it the other way around.
No, the dentist won't work on your teeth while you still got an infection in there and they're inflamed.
Exactly. Fix it first.
Because it's going to hurt enough anyway.
And we get it that you're getting it. Yeah, it's stressful. I'm getting these calls and everything, but we emphasize to people, look, if you're not working, your wages can't be garnished.
Right.
You don't have any.
Well, and you don't have to answer the phone.
Change your phone number. Don't answer it. Call, block it, whatever. And our advice is always open a new bank account at a new bank.
Someplace that you're not currently dealing with, so no one has access to that account.
And that way, if you do get EI or have any cash at all, it goes in that account. Because if you owe bank ABC a bunch of money and stop paying them, but you're banking at ABC, well, they can just take the payments out.
It's called the right of set off. They're allowed to take money out of any account if you're missing payments on a different account.
So in the short term, and the answer is, I'm denied credit and I'm in a pinch. Number one, protect yourself.
Right. New
bank account, put the money in there so that it's whatever money you've got, the existing creditors can't tap into it.
Yep.
You got to get your budget into balance. So finding a new job, cutting your expenses, moving back with your parents, whatever. And then that's when we talk about the consumer proposal.
That's right.
You got to do it in that sequence, though, or else it just doesn't work. So, okay, so here is my answer to the question, what can you do if you are denied credit and you are in a pinch? Well, do all the immediate things we just discussed. That's why we did the whole show on it.
Hit rewind.
Here you go. Sell your Well, here, I'll give you the summary. So for anybody who skipped ahead to the last minute of the show gets the whole answer. Sell your assets, get a side hustle, reduce your expenses, ask your creditors to defer your next payment, but also realize that your problem isn't just a short-term problem.
Right.
There's a bigger picture here. You've got too much debt, and all of the tweaks in the world aren't going to solve that problem. Like you said, our average client over a couple of thousand in payments a month, and they got $300 to do it.
You just can't.
You just can't. So you need to eliminate your debt, and that's why an option may be to talk to a licensed insolvency trustee about a consumer proposal or even a bankruptcy, because you got to get off the debt treadmill.
Right.
Pretty much as simple as that. Okay, that is our show for today. So this is where I tell people to like, subscribe. You're supposed to say smash the notification button, but I don't know what that means. Like, what are you smashing here? So I would just click it on your computer.
What's
there.
the notification button?
Well, it every time there's a new podcast, it goes bing, 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 you see.
Cool.
So it's the greatest thing. So, and there is a new podcast, of course,
every week,
every Saturday morning. So tell your mother and your grandmother, and they can watch it as well. Ted and I will be back with an all new episode next week. I don't know what's going to be yet, but we'll be back. So until then, thanks for listening and watching. I'm Doug Hoyes. That was Debt Free in 30.